next few sessions. Joining us to explain why is Louis Mendelsohn. He's President and Chief Executive of Market Technologies Corporation, and he joins us this morning live from Tampa, Florida. Good morning.
Good morning.
First of all, I want to get an idea. We obviously at Bloomberg focus an awful lot on the technical indicators. What indicators do you closely follow?
We forecast three technical indicators. One is called a neural index, which indicates whether or not a market is expected to make a turn in the next 2 days. A second indicator is a predicted 5-day moving average for 2 days into the future. And the third indicator is a predicted 10-day moving average for 4 days into the future.
So for instance, the NASDAQ 100, you also focus on the 10-day moving average, correct?
That's right. Yes, we do.
And tell me, so what are you looking for specifically?
Well, for instance, on the NASDAQ, you can see that over the last month or two, the market has been obviously moving down, and our predicted 10-day moving average has been below the actual 10-day moving average. There have been a number of abortive attempts on the part of the NASDAQ 100 to rally, in which the predicted moving average either came up and touched the actual moving average or even penetrated it up to the upside, perhaps by 1 day. But these attempted rallies have failed, as you can see from the chart on the NASDAQ 100.
So based on what you're looking at right now, what is that telling you about future market activity? You know, of course, we've been talking, as everyone else has, about whether or not the markets have hit a bottom. I'm curious what you're focusing on and what it's telling you about the market outlook at this point.
Well, we look at intermarket data, and we actually track 10 various intermarkets for each target market that we're focused on. And we use a mathematical tool known as neural networks, which is a pattern recognition tool that looks for hidden relationships in the data. And that allows us to make these various forecasts of the moving averages for each of those target markets. On the Dow, for instance, the predicted 10-day moving average turned positive. That is, the crossover of the 10-day moving average compared to the actual moving average turned positive on March 27th. And it has stayed positive since then. The neural index, which tells whether or not a market is making a bottom, and the 5-day predicted moving average crossover both turned positive last Thursday. So for the Dow, all three of those predicted indicators are solidly positive at this point.
And that's a short-term outlook?
It's a very short-term outlook. We only look ahead 4 days, and we update our models each evening, so every day we're constantly refining our models for the following 4-day period.
So Lou, your expectation at this point is what, over the next week, that we should see the Dow trending higher?
Well, actually, we're looking at not only the Dow, we're looking at the S&P 500 as well as the NASDAQ 100 and the NASDAQ Composite. All four of those indexes at this point in time are indicated to be positive based on those three predicted indicators that we're looking at. The Dow, of course, turned positive back in late March, and the NASDAQ has just really turned positive just last week. On Friday, the 5-day moving average turned positive on the crossover, and on Monday, the neural index turned positive, and just yesterday, the 10-day predicted moving average turned positive. So things are looking rather constructive at this point in time. The question for me is whether or not the rally in the NASDAQ is going to hold, or whether it will simply be another abortive attempt to, to move to the upside. Whether it has legs or not will be determined by how our predicted indicators look over the next 1 to 2 days.
So in other words, it almost sounds like you said they look constructive, particularly when we're talking about the NASDAQ, but it sounds like you would be placing bets at this point.
Well, it is constructive in that all four indexes are all positive on all three of our predicted indicators. But I would really like to see another day or two, at least on the NASDAQ Composite and the NASDAQ 100, where the predicted indicators are increasing in strength, and the spread or the distance between the predicted and the actual starts to widen a bit more. That would give me a lot more confidence that this up move has legs.
Is there some confidence, though? Let's say take a look back a month ago or so when you were looking, obviously, as you track these indicators day to day. Do things, though, overall, it sounds like you're saying they do look overall much more positive?
Yes, they definitely do, particularly because all four of the indexes are all positive at this point in time.
Any limitations, though, as I said, we obviously focus an awful lot on technical indicators, but any limitations that investors at home who are watching this should kind of take note of in terms of tracking these?
Well, the big issue, of course, is that we've had a number of attempted rallies that have failed. And so, needless to say, we could have short covering that's causing this, and you don't want to get caught in that trap again. So I would like to see another day or two of some further strength indicated before I would feel fully confident that we've really reached the bottom here.
And are you looking at any fundamentals in terms of individual equities or anything? But no, it's just really closely following the technical indicators.
Yes, we completely go by the numbers. Again, as I said, we're looking at 10 related markets, so it's from a global intermarket perspective that we're examining these markets.
Okay, Lou Mendelsohn of Market Technologies Corporation joining us from Florida this morning. Thank you. We appreciate it.
Thank you very much.